Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Okay, so where do I position myself? Well, here's where you can get a little bit more creative because, and let's say I go over to the cable here. So if I'm looking at the British pound US dollar, this would be the GBP symbol. Or if you're looking at the other convention, you could look at the Pt6. But the GBP is the British pound US dollar. So it's more in line with the way you look at your spot. Okay? So you look at either one. Okay? Pt6 for the US dollar British pound, or the GBP for the British pound US dollar, which is again more at the Forex, the spot convention that you're probably used to. So if I'm looking at the cable here, by the way, what has this thing been doing? Okay, let's talk about picking a direction now. What has this thing been doing? Well, as opposed to what it was doing before, in terms of the direction, huge markdown cycle we saw with a couple of hiccups in here. Little hiccups you could take advantage of. But before the markdown, what did we have? Take a look. Usually, not all the time, I hate saying always, and I hate saying never, but usually before you have a big markup or markdown cycle where you have this wave moving down at either 4, 6, or 12 to 2 o'clock, I use clock angles, okay, preceding that is going to be some sort of sideways market. Boredom, confusion, I'd say this is boredom. I love boredom. I love buying my puts or calls in boredom. Okay? Love, love, love it. Now, how do I pick a side? Okay, let's talk about that. A lot of times, you could have a chart pattern in this scenario. Okay? A lot of times, you may use an indicator like MACD to help you see where the momentum might be, okay, in terms of the direction. I use it very simply. I could use the MACD histogram here to show me the weakness, which I know, obviously, once the market starts moving lower. But how do you decide to put or call? That's number one, okay? And then second would be location. So let's go tackle those two subjects right now. Okay, so number one, I've got to consider the time frame because the 240 can cycle through these market cycles, can go through these phases, these cycles at a much more rapid pace than a daily. So a 240, I don't need as much time, do I? If I'm intraday options trading, I don't need as much time, do I? Okay, so I could buy a near expiration date and not pay so much for time. If I'm looking at the GBP, let's go ahead and go there. I'm typing that in wrong. Oh, it's transferring. Okay. So if I'm looking at that particular symbol, the GBP or the BPX, whichever one, the first thing I need to do is, again, put my time frame into context because I'm not going to need as much time for an intraday setup as I would an end-of-day setup. Okay, and as I mentioned, I'm either usually looking at that 240 or that daily. For a 240, I'll tell you, I probably don't need much more than a couple of weeks. And that might sound like a lot even for a 240. But really, you don't even need to go out that far. Usually a 240 is going to give you your setup and the realization of your trend, or at least being able to benefit from the move in the direction you're expecting, usually within a week. So that's why I say, 2 to 3 weeks is probably fine. Okay? But for a daily, I'm going to give myself usually at least a month. Okay? So I'd rather pay for time than have time decay just wear away my options value. Okay, time decay is notorious. You got to really be aware of that. I forgot what the statistic was, but it's some unreal amount of options that expire worthless because I think a lot of people get too focused on strike, and they know they've got, say, X amount of dollars, and they allocate too much money to strike and not enough to time. Okay, or they allocate too much to buying into a volatile time, and they don't have a lot of money left over for a decent strike or enough time. So don't let the volatility aspect wear away your purchasing power. Okay, and don't let your purchasing power be worn away by this thinking that you need to be in the money. Okay, what you're trying to do is balance out, giving yourself enough time to get the option close to the value of the option, the price of the underlying market close to your strike price. So again, for intraday chart, like I mentioned, 2 to 3 weeks. For the end of day chart, I'd like you to start with about a month. Okay, give yourself a month to expiration. All right, so if I am shopping right now, let's talk about something that's happening right now. If I'm shopping right now, and I'm wondering if I'm just having some hiccup here with my my own internet browser here, I apologize. If I'm shopping for this, let's take a look. Number one, how am I going to determine the direction? Well, some folks might look at where the markets come from, okay? We want to see where the markets come from, so obviously we're retracing a relatively large move lower. You'll probably want to take a look at some of the key support and resistance levels that are keeping the market range bound. Okay. You might want to take a look at something like the MACD to see which side of the zero line it's on. I would slightly favor the call side of this, the upward side. But the bottom line is, if I'm looking at a market that's moving sideways, quite frankly, I know that the market could break in either direction. Okay? This gives you a tremendous ability to go ahead and bracket. I may not bracket with my spot. I don't. Okay, but I have a tremendous opportunity to bracket with my options. I mean, my bracket is I could buy puts and calls. Okay. Whichever way it breaks out through. Let's say I'm looking at a rectangle, or maybe I'm looking at a triangle pattern. This is where you can use some of your more conventional trading tools on your charting tools, I should say. Maybe I'm looking at a triangle pattern, or a neckline, or a rectangle, or whatever it may be. I could take advantage of those. How would you determine which way you're going to trade this if you were in the spot? You're going to pretty much do the same set of steps, but instead of getting long, you're going to buy a call. Or instead of getting short, you're going to buy a put. But the timing is a little bit different because you want to buy that call or you want to buy that put and as quiet the market as you can, which means if it's obvious to everybody that the market's breaking out or breaking down, your volatility is going to go up. Now, you're not always going to be able to buy the absolute least amount of volatility, granted. But buying a call on an initial breakout or buying a put on an initial breakdown is a whole lot different and cheaper than buying within the context of an established trend and following that market cycle's direction. Okay? So I'm not saying you're going to eliminate it. What we want to do is be as good as we can about trying to get to as close a zero impact on our premium from volatility. So again, I'm trying to benefit from buying within accumulation distribution. I'm trying to benefit from buying into pullbacks in an uptrend or into shorting, or in this case, buying puts in the corrections in a downtrend, or again, buying calls in the corrections of an uptrend. All right.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.